This is a data privacy detective. Today we're going to talk about data privacy and credit bureaus. Now, the three big ones are Experian, Equifax, and TransUnion. How do credit bureaus affect not only our ability to get a credit card or a mortgage or a car loan, but how else do they affect our personal privacy? And how do the credit scores that they report affect us in ways beyond evaluating personal credit risk? Well, let's turn our spyglass to the credit bureau industry. The three big ones, they operate independently, but they do a lot of things in common. So what is a credit bureau? Well, it's a company that gathers data about us and our credit history. And then it makes our credit details available to other companies like banks, car dealers, mortgage companies, other credit card issuers, people who might lend us money. And these bureaus use algorithms and AI to create a credit score. Now, credit scores range from a bottom rock low of 300 to a top peak of 850. There's a whole range from poor to excellent credit. Well, where do the credit agencies get the data that they rely on? Well, it's sent to them by lenders. That means it's sent by banks, landlords, retailers, credit card issuers, people who lend money to other people. And the bureaus gather this information, generally really without our knowing it's happening. We may assume it is, we may not. And not with our express consent, asked each time that a financial institution is going to send money to Experian or Equifax or TransUnion. It just happens. And these credit scores become very powerful things. They drive the interest rate that we're going to pay on loans, including credit cards, mortgages, even with our landlord if we're trying to rent an apartment. We may not even get a loan. We may not get the apartment we want because of a credit score. And we don't bargain about the interest rate then that the lender offers. Now, we can walk away from it. We just not borrow at a high interest rate. But we either accept it or we don't get a new credit card or a mortgage or a new car. Now, applied to the United States, we're talking about a lot of money here. Total household debt in the United States is almost $18 trillion in late 2024, according to the Federal Reserve Bank of New York. Consumer credit debt of households and nonprofits is over $5 trillion. A lot of loans going on. And to understand the impact on individuals of how these credit bureaus operate and assign scores, let's consider a true current example. Now, for privacy reasons, I'll call our individual Gwen. Gwen is a very wealthy individual with a social conscience. She helped a returning citizen get credit when he left prison for many years with Governor clemency on a nonviolent drug-related offense that he committed decades ago. She guaranteed his credit card to help him build credit, co-signing on the card with the bank issuer of the credit card. Now, the other individual was the only one. The returning citizen was the one who used the card and handled it responsibly for a number of years. Still does. At one point, more than 4 years ago, he missed, not Gwen, he missed a minimum payment deadline. I think it was $20. Gwen immediately paid $1,000 to pay down the credit card debt at the time, far more than the minimum due to avoid late payment charges. All sounds fine. But what happened to Gwen's credit as a result of this noble act on her part? Well, her credit score was rated by Experian 100 points lower than the top of the scale. There were no other adverse reports about how she handled her credit. She's a wealthy person, plenty of assets in the bank and otherwise, direct payments by the bank. Never missed another payment other than the one that the returning citizen caused for a day. Her score on any logical basis should have been 850 or certainly near there. She carried cash and savings balances at her bank of more than 10 times the amount at any time on her own Visa card with the same bank. She always paid her credit on time. With American Express, she insisted on making payments a week earlier than the due date with automatic payment. And she was debt free. Now, she did lease a car, but not quite a loan lease of a car. And when she checked her credit report, she found that she had caused a not meeting a timely payment. And then she found something else false and concerning to her. Credit report from Experian included an address. Well, credit reports include addresses where a person lives. And her report indicated she'd lived for 17 years in one residence, a home, and about the same at a condo that she owns later. But a third address appeared. It said that she lived during this period of time at an apartment unit in a low-income area. Well, she was concerned about the privacy implications of this inaccurate, false report on the Experian credit report. Wouldn't that indicate to someone who saw it that, I wonder why she had to move into a low-income apartment and rent? Was she married and having a separation, kicked out of the house? Did she have to move out for a time? Was she having severe economic disturbance during this period? What would have caused that? And reporting that she'd missed a due date of a payment was misleading. She hadn't caused that, and she quickly caught it up. She addressed that with a person she's able to get on the phone with Experian, and that person filled out a report about it. For the false address report, it was quite different, though. For the false address report, she went online with Experian, and you can click on dispute matter. She clicked on that. And it wouldn't let her dispute the matter. Instead, a pop-up came and said, you'll have to contact the financial institution that reported the address. Don't bother us until you've done that. Well, she then wrote a letter to the bank asking that it tell Experian that it was never her address. And she continues to await a reply about that. Problem not resolved. Now, for the late payment report, she was able to talk with a person, as I mentioned, who said that she understood that what Gwen was trying to do, help a returning citizen build, B-U-I-L-D, her credit. But the report listed a comment that she was trying to bill, B-I-L-L, the credit of the other person. Well, there we are. So what do we make of this? Well, several conclusions. Data feeds credit reports. Good data, good outcome. Bad data, bad outcome. Credit bureaus would respond here. Well, they only provide a credit report based on credit history. I mean, if Gwen's wealthy, that's kind of not their business. It's not something deemed relevant by the credit bureau. Any lender, of course, would disagree with that. A person's wealth is plainly a major factor in whether the individual is a solid credit risk. Credit bureaus cannot be viewed as the supreme judge of credit worthiness. Their reports deal only with credit history, although they do deal with more than that. Credit bureaus simply don't possess the full range of data needed to make an overall judgment about a person's credit risk. Conclusion number 2. The way that credit bureaus use data that they get from banks and other sources is not perfect. In Gwen's example, the bank surely did not report that Gwen had moved out of her home to an apartment unit in a low income area. Instead, it probably reported there were two account names, and one of them lived in the apartment, and Gwen lived in a home at her address, her actual address. Experian most likely used a poorly designed IT system or an algorithm to report falsely that Gwen lived at an address she had never inhabited. Well, now that isn't really just a trivial matter. This involves an invasion of personal privacy beyond credit history. Reporting the addresses of people should be accurate, even in a credit report, because it involves sensitive personal information that many people would prefer to keep private. Take couples who are separating prior to divorce, and one has to move out or move in, or one doesn't want their address revealed for other purposes, perhaps fearing some form of abuse or attack. So, mere addresses in a credit report is not a nothing. And reporting false information raises the risk that third parties are going to draw adverse inferences that are inaccurate about a person's history, where they could afford to live, whether they have stable home lives. Conclusion 3, the inability to dispute a false report directly, as Experian's online system shows, instead leaving it to the individuals, going back to the reporting bank before Experian will do anything. That's really not acceptable business behavior. Under defamation law, if somebody tells a newspaper or TV reporter something that's false, the TV station or a news reporter can't just report it and say, well, it's your problem if it's false and causes you defamation and loss of your job and other things. That doesn't work, and it shouldn't work here. Now, this example underscores on a broader level what happens when AI applications get involved with reporting important things. AI in this example shows how Experian's data use and algorithms resulted in a misleading credit score and projected false information about a person that can affect not only her creditworthiness, but the perception of others about her. Now, this is just one glimpse into risks to personal privacy that AI and algorithms and the risk to personal privacy that exist when we deal with things like assessing creditworthiness. Now, we're going to come back to these risks about AI in future podcasts. Well, what can an individual do about this matter? Well, here are some suggestions. First, check your credit scores with the three big credit bureaus. You have the right to get a credit report free of charge once a year with each of the credit bureaus. Look at the information the report shows about you. It's more than a score. And before you seek a major loan for a mortgage or to buy or lease a vehicle, know how you're scored by all three bureaus and take action if needed. Number 2, dispute anything that's false or misleading in your credit report. Under the Federal Fair Credit Reporting Act that governs credit bureaus, individuals have the right to dispute anything on the report and to have it fairly corrected if it's inaccurate or misleading. Number 3, consider adding data about you beyond the credit history that is already coming to the credit bureaus. For example, you could provide information from the bank that you use to make direct payments for other loans. Experian, for example, offers a thing called Experian Boost. It doesn't cost you to use it, at least financially. It would link other payments made from your bank account, for example, to pay your phone bill or for other streaming services, things like that. That, if your payments are regular and can boost your credit score, you can link that, and Experian generally will end up boosting your credit score because it has more information about you being creditworthy. But recognize at the same time that this creates other risks because you'll then have provided your banking information about these other matters to a processor called Finicity or Finicity. I'm not sure how to pronounce it. This includes a hacking risk. Credit bureaus and other data processing companies are subject to hacking risk, as we all are. So there's a balance here between privacy maximization and correcting your credit score through a no charge boost about how you make other payments on time. Number 4, consider using on a free basis a credit monitoring service. There's some, for example, Credit Karma or Credit Sesame. You'll find others on the website, and check how they're rated by independent raters of such companies. Finally, for serious matters, if your credit report is inaccurate and misleading in significant ways and you can't get it corrected easily yourself, consider engaging a credit repair company. There are many of these. Be careful of not overpaying for things you can do yourself. But if you can't correct false or misleading information yourself about your credit history, and that causes an issue to you about your creditworthiness or your privacy, there are services you can engage to help you do it. In closing, as always, I will remind us all, protecting your personal privacy begins with you.